Going into 2024, I think that there's two different types of buyers and sellers that would really work well in this market. And in this video, I'm going to explain who they are. By the way, my name is Hussein Kabani. I'm a real estate broker focused on the Durham Region and Toronto. If you are looking to buy or sell real estate or just want some honest advice, I encourage you guys to connect with me. Let's get on to what we already kind of know. So 2023 has been a very interesting year. So our inventory position at the beginning of the year started off pretty low. I think we were somewhere around like that 9,500 listings available for sale throughout the GTA. And it started off slow and we weren't really sure where it was gonna go because we still were sitting at a higher interest rate and January sales were just not coming in and properties were just not moving. So it started off very, very slow. And then all of a sudden, kind of at the end of February, going into March, sure enough, we had that spring lift and prices started to rise again. People that were sitting on the sideline waiting to get deals all started having FOMO. They're just basically like, hey, I need to get in on this because I was watching this area, this type of a house, and it's starting to go up. And they thought this was going to keep going down, but it didn't. It started to pick up. So we had all these people start to enter the market and it really started to raise up the prices again. And a bunch of the houses that we had at the front half of this year, we had multiple offers like crazy. What ended up happening was, sure enough, right when the spring market's supposed to end, mid-June, kind of end of June, it's halted. And guess what? That's where we had to change our strategy. So we had to set up people that were gonna do buy and sells that, hey, you gotta go and buy first because that's the way that the market was moving. And then we're gonna turn around and sell your house. But knowing us, we have our finger on the pulse of what's happening in the market. So we had to switch gears. We actually had a person that had committed to purchasing a property end of May, beginning of June, and they were prepping their property to come onto the market. And we were telling them, we got to get this ready. We got to go on the market. We got to get this thing done right now. And sure enough, we almost got caught in this little bubble over here where the transition happened. And that transition happened mid-June to the end of June. After that, the market felt completely different. Like houses weren't moving. People were setting up multiple offers. They were not working out. They were terminating, relisting at a higher price. And things were just taking a little bit longer to sell. But our sales were still happening. So our market just changed from becoming a multiple offer, like being very stagnant at the beginning of the year, to going into multiple offers, to being an okay buyer and seller market, towards now going into the end of the year. It's just been kind of stagnant. There's not a lot of sales that are happening. Things are sitting on the market longer and we're seeing a lot more price reductions. So what does this all mean moving into 2024? Well, again, guys, nobody has a crystal ball. No one's going to be able to predict exactly what's going to be happening. And even right now, I personally think that there could be three situations. So this goes back to elementary school. Remember the books that you used to read and you choose your own adventure and you could page, 67 or 53 or 41, whatever adventure you want to go on. So you pick your adventure and I'm going to try to tell you the three ways that I think this is going to play out. Okay. Number one is we're going to pretty much see a balanced market. It's going to be equal for buyers and sellers. We're not going to see much of a price appreciation and things are just going to kind of hum along. Okay. I don't think the sales are going to be extravagant. I think we're probably going to do somewhere around 65,000 sales in the whole year. It's not going to be anything crazy, but things will just kind of move along. The other alternative to this is with already you guys know that the interest rates are due to come down. All the talk, the speculation in the market is that the rates are going to come down. Who knows if they do, but the talk right now is that they're going to. And if you guys have been following along, you already know that the bond market has kind of come down already. So the fixed rate mortgages have gone down and even variable rate mortgages have been discounted by the lenders already. So without the Bank of Canada reducing the rates actually have already gone down. Now, let's combine that with the Bank of Canada actually reducing the interest rates, right? And I think this is going to cause a bit of a buyer frenzy. So I think what could happen as an alternative is that we'll probably see it maybe start off a little bit slower at the beginning of the year, similar story to what I was telling you in 2023 this year. And we'll probably see this great spring market because as people get comfortable, they know that Bank of Canada is not going to raise rates. The other way it's going to go down is rates are going to come down. And I think maybe people will end up buying these properties up. I just hope that this third example doesn't end up happening. So if you see these buyers buy up these properties, hopefully things work out like they did in 2023 because it wasn't that bad, okay? It just kind of, we started off slow. We had a great spring market. Things kind of leveled off. We didn't really, in my opinion, see that lift kind of happen in the fall market, but it was pretty much okay. So that's, I think, the best case situation of what we can kind of see happen. We also have to take into account that there are people out there right now that probably can afford their mortgages when it goes into a higher rate. The other thing also is that the consumer debt has been picking up, okay? And the consumer debt is part of people continue to spend money on whatever. And the other part of it is that people may be hitting their line of credits or whatever to try to service their mortgages at the same time, which is still counts as your consumer debt. Now, the worst case situation I think I can probably see happening is this. Rates start to come down a little bit. People go into this buyer frenzy and they start to like say, oh, I'm going to miss out if I don't buy now. The prices are going to pick up. It's going to go up crazy. And everybody jumps on this bandwagon of start buy, and forget that they have all this consumer debt. And what if it just comes crashing down at that point? And I think if that happens, the point of recovery for our real estate market is going to become a lot more tougher. Now, which way is this going to go? I don't know, no idea. That's why I said at the beginning of where I'm telling you these three options is you got to pick your own adventure of where you think this is going to actually go. I don't know. We still have to remember that despite the mortgage rates going down, there are going to be people that have 1.5% mortgages, 2% mortgages that are going to come up for renewal, and they are not going to be able to afford these places regardless if the mortgage rate comes back at 4 or 4.5%. It's just not going to be feasible for them. I'm talking to you people right now. If that's you and you see that your mortgage is going to end in 6 months, 12 months, 18 months, I strongly recommend that you look at those numbers right now and take a very, high approach to what you think the interest rate is going to be and work your numbers on that. And if you feel like that's not going to work for you, I strongly recommend you looking at what your alternatives are and possibly capitalizing on what may happen in the spring market where this lift comes in. Because I think if you wait until the end and you go to try to do your renewal, you might end up in a lot bigger of a trouble than trying to sort out your situation right now. We had Vernon on another podcast earlier, and he also introduced the fact of like, hey, it's not your mortgage payments on a monthly basis that we're looking at, but it could also be your car lease payments. I'm in that situation right now. 3 years ago or 2 years ago when I got my truck, I think my lease rate was 1.99. And right now I'm trying to replace that same truck. And my lease rate right now is like 7.99 or 8.99. It's crazy. So if you're going to have to go onto a new lease and replace your vehicle again, like you got to probably budget a couple $100 a month per each vehicle on that as well. So don't forget that. I think that we're not in the clear here right now. For sure, there is going to be demand. Even what we looked at with Black Friday that just passed, there was a ton of money that was spent. But guess what? Typically, there were really good deals out there. So that does kind of give us another indicator that there is money out there, but people are waiting for the right deal to come along. And when people start jumping on these deals and these houses start to sell, I'm telling you, I've seen it so many times before, everyone's going to start jumping on this thing. And honestly, if you're trying to secure a good deal, it's going to be too late at that point to get the best deal. The best deals usually are available when no one is looking for these deals because nobody's confident. I'm not telling you to buy right now, but if you're in a position to consider doing something, I might look at December, January, February, because I think that's before the fear of everyone starting to buy is going to kick in. So you might actually be able to get a better deal. But again, it depends on what your long-term position is on real estate, and you got to decide for yourself. Everyone is a different person, and I don't think, especially right now, that we can have a broad idea of like a general consensus of where this is all going to go. If you personally believe that real estate in the long run is going to appreciate and you're going to do really well in it, then I think that it would be a good idea for you guys to invest. If you think doom and gloom and it's going to all go down the tubes, then probably sit on the sideline and wait it out. But it's really going to depend on what you personally think is going to happen based on looking at all of the factors that are, you feel like are going to influence the market, and then looking at your personal budget itself. So I'm trying to give you guys a forecast of what's going to happen in 2024, but I'm telling you that it's an unknown. And the bottom line is that you have to look at your budget. Don't only look at your mortgage, look at your car leases, your finances, your debt, and figure out how you're going to end up servicing all of this stuff, and then make a decision from there of what feels right for you guys. Now, look, I'm always open to having a real, honest, and clear discussion with anybody that's open to it. I don't want to put anyone into a product or sell you or pitch you on anything that is not right for you. And in even saying that, I'll tell you, like, I think the best people to kind of work in this market right now, I would say it's two categories, okay? One category right now I think is a good buy is somebody that has a smaller house, okay? And they need more space. Maybe their family has grown and we had a perfect situation for this, okay? We had a person that bought a pre-construction townhouse. It was 2 bedrooms, 2.5 bathrooms. They didn't have any kids. Now they got 2 really cute little kids, okay? And they need more space. So for them, it made sense. We sold their house for $750,000. They didn't break the bank, guys. They went and bought something for like $905,000, okay? Very reasonable. They both have good incomes. They're very comfortable. They're financially stable. They're savvy. They thought this whole thing through. It makes sense for them to upgrade. They got a pretty decent price for their house. They got a pretty decent for their buy, and they're comfortable. That made sense for them. So this is one of the markets I would say it makes sense. The second market I would say is that if you do your math and you're like, damn, there is no way I can afford to move this thing forward, then I would really encourage you to say, hey, let's get ahead of all of this stuff. How can I work this thing out? You know what? I got a 1.5% rate right now, and the rates, I don't think I'm gonna be able to get less than 4%. And even then, I don't think I can make these payments. Well, guys, if that spring market happens, I would say be prepared to capitalize on that. So I think these are the two markets right now that are gonna be really where people should be making transactions. And when it comes down to investment properties, that's really on you. I don't think anybody can actually confidently give you advice of what to do there. That depends on your personal take on where real estate is going and what your finances are. I would love to have a conversation with you guys, okay? So my calendar link is gonna be below, and let's have a real conversation about your real estate. And until next time, guys, remember one thing, get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.